Hey guys, welcome back to We Talk Money. Man, it's like it feels empty in here without Nikki today.
Yeah, we've just got this surge of testosterone.
Yeah, so Nikki's out this week, so it's just me and Trav in the studio today. We'll try to handle it, I guess.
We'll do our best.
Yeah. Man, so I want to hear about the stock market, but the past week in crypto has been absolutely wild and pretty turbulent. Despite all the quote unquote bad news that's been coming out, Bitcoin's price has been holding up really well. We saw this like early 2019 too, when the markets were just getting hammered with all this bad stuff happening and price just shook it off. Whenever I see that, that's actually a pretty bullish sign to me, but we can dive into all that stuff. But just real quick, how's the stock market doing?
It's kind of a snoozer right now. I'll be
Yeah?
honest. Yeah, I mean, there's always stocks moving on any given day, but I'm kind of bored with it this week. We're just kind of waiting for a lot of things to happen on the political front over the next month, but also earnings season for Q3 gets started up in about 2-3 weeks. And prior to that, a lot of companies are just in quiet periods, so there's just not a lot of specific news in the markets.
Which is interesting, right? Because the NASDAQ has been on a multi-month rip ever since March, had a little pullback last month. And you know what, we've got like 30 days-ish until the election and a lot of obviously volatile stuff happening in the economy, but the stock market just kind of seems to be taking a pause, I guess, prior to earnings.
Yeah, and it is the calm before the storm because we're going to get the double whammy at the end of October and early November of earnings season for Q3 and the elections. So,
Nice.
you know, maybe it's a good thing that we're getting a little bit of a breather here before it gets really crazy in late October.
Yeah, cool. Well, so I guess this week or at least this month is like crazy season for crypto. And then maybe later in the month, it'll shift when crypto kind of settles out. But basically, here's what's been happening, guys. For anybody that hasn't been following along, the big news last week was BitMEX got the hammer from the U.S. government. This is probably the biggest deal that I've seen since Mt. Gox in like 2014. Pretty wild stuff. So for anybody that doesn't know, BitMEX is basically getting hammered from two sides of the U.S. government. On the regulatory side, there's like a laundry list of issues stemming from like not being licensed and following like the regulatory hurdles. On the other side, which I think is probably the more serious side, is like there's accusations of like enabling money laundering and stuff like that because they didn't start doing KYC until recently. And so, man, it's a really wild time in the crypto kind of exchange space. And then as of this week, actually today, this came out, the FCA in the UK bans cryptocurrency derivatives after the BitMEX charges. So this is, I think this is going to create kind of a waterfall of just more action, more regulation from around the world. And look, that's why earlier this year I tweeted this, and I get why this is probably not the most popular opinion, but in March I did this kind of tweet storm where I talked about, you know, some random thoughts for crypto traders during these wild times. The first thing, number one on my list, was stop trading with margin on shitty, unregulated crypto exchanges for one of several reasons. You know, obviously the regulatory side is one thing, which, you know, everybody has their own opinion about it. But on the practical side for traders and investors, when you trade on places like BitMEX, I have never seen so many people get liquidated for insane reasons. Like, in my opinion, yeah, you know, BitMEX gave access to people to be able to trade on a market. But I saw so many just flash crashes and just weird liquidation scenarios where a lot of people lost everything.
Yeah.
So just you know, kind of a sad thing, but also probably a step in the right direction because you've got this bifurcation between exchanges that are trying to abide by the law and then ones that are like, no, we're going to kind of play in this wild, wild west. I think those are going to get the hammer. And DeFi, I think, is at risk of that as well. And DeFi has actually gotten hammered this week. Also, if we look at Binance's DeFi index, it's down over 50% in a month. So we'll jump into this one. If you take a look at the chart, it was basically up around 1,000 just a month ago, and then we're down around 500 today. And a lot of, you know, like the DeFi projects that were really, really hot over the past month, they've just been getting absolutely crushed because when you have everybody that rushes into the same space and chasing the same alpha, that's when things implode.
Yeah, that stuff was on fire just a couple of weeks ago. So I guess it's not too surprising it's cooling off. But so correct me if I'm wrong, the whole idea of decentralized exchanges is that you won't have to worry about the regulators coming in and shutting things down. Why do you think they could be at risk of regulatory backlash as well?
Well, so I think that, and anybody that has a more educated insight into this, let me know. But it's very clear to me that one of the biggest priorities of not just the U.S. government, but pretty much every Western government right now is to try to stop terror financing. And basically that's the reason they give, but they want to maintain control over the financial system, right? They can't shut down Bitcoin. It's clear, right? There's no possible way for any government to control Bitcoin. What they can do is they can go after the on-ramps, right? And the on-ramps that try to play by the rules, you know, the Coinbases of the world, love them or hate them, whatever, the Krakens of the world, right? They're going to be safe. They're going to be, you know, they're playing in the right sandbox. Anybody that is not doing KYC is making it easy for people to launder money, for hackers and terrorists and, you know, the quote unquote bad guys to launder money. Governments are going to go after them, right? Yeah. So any centralized company, even like Binance, anybody like that where there is a company behind a DEX, they're going to be crushed. I mean, they're going after them. Yeah. Truly decentralized projects, I don't know. Yeah. I don't know what the future of that is, but it's going to be harder for governments to go after it, but it'll probably develop more like you have like the dark web and you have like the regular web. Yeah. You're going to have like regulated exchanges and you're going to have non-regulated exchanges. Yeah, very interesting. It sort of reminds me back 10 or 20 years ago when there was the file sharing services, mostly used for music back then, but also used for movies increasingly. And so, you know, there was a few of those services that were peer-to-peer, but they were still shut down by regulators because regulators were able to go through the internet service providers or, you know, infrastructure companies that offer, you know, the on-ramps to the internet. And they were able to somehow shut down the parts that were connecting the peer-to-peer users or whatever stuff that was centralized to make that happen. So yeah, I kind of wonder if, you know, at least to some degree, could the decentralized exchanges still have a threat from regulators through those types of channels? I mean, look, even what is it, like the Tor and places like that, still allegedly the NSA and, you know, organizations, CIA runs a bunch of exit nodes, I guess. Yeah, they still can infiltrate it. So it's always interesting and important to think about that. You know, if you're depending on that to be untouched, you might want to rethink that, you know. Yeah, I mean, it's an arms race, right? Like, and it's interesting. Like, I look at myself as kind of like an outside observer, right? I'm always rooting for the little guy and for innovation and for decentralization. But, you know, we live in a society where governments right now have the control and they're not going to relinquish that control easily. Yeah. And the thing that I care about more is like the investors and the traders, in our community and the ones that watch or listen to the show. I want to help them steer clear of the problems that come with kind of these shitty exchanges. And I put BitMEX in that category because, again, you know, anywhere where you have spoofing and front running and all the weird stuff that's been made illegal on US futures exchanges. Yeah. That stuff is all over the place in these unregulated exchanges. Yeah. And they were allowing at some point, 25 to 50 times leverage, which is just really irresponsible. And frankly, a good way to blow up a broker or an exchange if you offer that kind of leverage. Yeah. You know, if you get a customer that is big enough, they can take you out. We've seen that with some of the Forex brokers who blew up in the past decade. Yeah. I think we've seen it in some stock brokerages as well over time. But now the bigger established ones, the max leverage you can get on most products in the stock market is like maybe 2 or 3 or 4x. Yeah. I guess in futures you can get maybe 5 to 10x leverage on some products, but you know, it's not 50x where a 3% move can wipe out the trader's capital. Yeah. And I just, you know, I can't tell you how many people I've gotten emails from or DMs like, oh my God, I got on BitMEX, I started swinging, and before I knew it, everything was gone. And like, I want to help, educate that person, and B, like, protect them, right? Like, say, like, okay, here's how you protect yourself from that happening, right? Like, because the worst thing is to have somebody come into a market all excited, lose everything, and then be like, well, screw it, I'm never coming back, right? Crypto's a scam, I got scammed, therefore everything's a scam, right? A lot of people have that mentality. Yeah. So I'm like, no, let's get people in the markets the right way and help protect them, right? Yeah. At the end of the day, it's like, the kind of the ethos of crypto is like, do your own research, be responsible, take responsibility for your own actions. But a lot of people that come into the financial markets, I mean, we see this on like Robinhood and the stock market too. A lot of people don't think that way until they get hammered. And my mentality is like, learn to survive, and then thrive. Don't try to get rich quick, because you're the dumb person at the poker table.
Yeah.
But learn and become the smarter person at the poker table. Don't be the fool in the room, right?
Yeah. Yeah, I love that approach.
Yeah, so I don't know. Man, the second massive thing that's happened over the past week is they finally nailed McAfee. So John McAfee, for anybody that doesn't know, he's the guy that started the McAfee antivirus software. He's just been a wild public figure in the crypto space for the past few years. Apparently, I knew he was taking money from ICOs. I didn't know it was this much, over $20 million apparently. And apparently he's been like evading taxes. He hasn't filed taxes in many years.
Wow.
It's interesting looking back at the ICO bubble of 2017. I got hundreds and hundreds of emails from different projects offering a lot of money to basically shill their projects. And I said no. Like in the early days when altcoins and ICOs were starting to develop, I was like, yeah, man, let's get in and help some of these companies develop. And so I had a few conversations with a couple of different companies. And I'm like, wait a minute. This kind of reminds me of like penny stocks, where like if you're a promoter and you're out there like taking money and then shilling, like that's probably not a good thing. So I made a decision early on to say no to all of that. And I mean, look at how many millions McAfee made. I left a lot of money on the table, but I want to be able to sleep at night, right? And like, I want
your own bed, not a jail cell.
Yeah, exactly. And I want to be able to like look at our community and like say, hey, look, guys, whenever I talk about something, it's objective. I'm not paid to shill some shitty ICO. And I guess this is the consequence of that.
Yeah. Wow. It's interesting. He was hanging out in the Caribbean for a while, right? Somewhere on like some beautiful island, but then I guess they caught him in Spain.
Yeah.
Man, that's so weird too. Like, it's like he probably had to know that if he traveled to a legitimate country that had an extradition treaty, that would happen. So it's curious that happened.
It seems like he just got more reckless over the years. I don't know the guy personally, but just seeing what he's done over the years by, calling for what it was like, Bitcoin's going to be 500K or $1 million, or he's going to cut his dick off.
He's going to eat it, right?
Yeah. Like just really weird stuff. So I don't know. I just, I hope like other crypto YouTubers like get the hint here, like be objective, don't shill stuff and get paid by a project. Cause in the penny stock market, we saw how that happened, what happened with that over the past decade or two.
Yep.
So moving on, let's talk about some macro stuff, Trav. Just kind of guide us through, I think the big kind of risk right now and what everybody's trying to figure out is what's going to happen as we come out of the coronavirus pandemic situation, right? There's so many variables to this. I like you, I listen to a lot of really smart people on the macro side. I can't figure this stuff out. So why don't you just kind of, I guess, give us some insight into like at least the employment situation, because this is one of the bigger factors in how this recovery is going to actually end up.
Absolutely. Yeah, that's exactly right. And there's a reason that most of us don't know exactly what's going to happen. It's because we're at a pretty critical junction in a lot of different facets of society right now, both with politics and with, fiscal policy, monetary policy, and then obviously with the virus thrown on top, that throws a whole nother level of uncertainty. So it's okay to feel like you don't know exactly what your crystal ball is, telling you is going to happen in the next 6 to 12 months. So one of the things that I'm focused on, like you said, is what's going on with unemployment and some of the stuff that actually drives the underlying economy, regardless of monetary fiscal policy, what's happening underneath with real people.
Yeah.
So we did get the September jobs report last week and for the US, and those numbers actually looked okay. The unemployment rate dipped slightly below 8%. Now 8% is still pretty elevated, or 7.9% still pretty elevated. We were at 4% pre-coronavirus, maybe even I think slightly under 4%.
Mm-hmm.
So, we're still at a pretty elevated level, but it has recovered quite a bit over the last couple of months. The concern obviously being that now there's going to be kind of a flatlining or a double dip, because you are starting to see some more layoff announcements in some of the troubled sectors. Like Disney announced they were going to lay off a bunch of people at their parks. You've got airlines that are standing by waiting to potentially lay off a bunch of people depending on what happens or doesn't happen with the stimulus package.
Well, Disney laid off, 28,000 people here, huh?
Yep, that's significant. We've also got layoffs in the energy companies, refineries were announcing. So a lot of the troubled sectors, I believe we also saw some layoff announcements from, the theaters are another area that aren't doing well. They're pushing all their movies back to 2021. So there's definitely still problem areas. Mm-hmm. When I look at data in other areas like retail spending, consumer spending, that has continued to improve, oddly, even through September, although the rate has come down a lot. The rate of improvement is slowing quite a bit. So we're starting to kind of flatline a little bit in terms of rate of improvement.
So it's like things got really, really bad, then kind of V-bottom bounced, and now we're kind of in that like no man's land of, okay, where do we go from here?
That's right.
Are we going to get back close to normal, or is this the rollover for another leg to the downside?
Exactly. And that's why so many people are focused on fiscal stimulus. What's going to happen with this potential fiscal stimulus? And literally every day we're getting different viewpoints on whether or not that's going to happen. Different Wall Street Journal headlines saying talks went well, talks not going well. Right now, it doesn't look like it's going to get done in the near term before the elections, to be honest. And so what does that mean as we go into critical Q4 where there's a lot of consumer spending? It's companies start developing plans for 2021 as far as their hiring and firing plans. It's really crucial. So I'm finding it hard to take a really strong viewpoint either direction. And that's exactly why we talked about I remain pretty hedged in my portfolio. I own the companies I really like, but I'm pretty hedged on market direction overall. I'm not sticking my neck out trying to make a call on where things are headed because there is just so many unknowns right now. Inflation, deflation, of course, we've got that conversation happening.
Constant battle between those two camps.
Yeah, we've seen like the Real Vision guys, they're saying, what is it, inflation ahead or
deflation, then inflation, is kind of a common narrative now.
Yeah.
Yeah. For me, it seems like the further out you go, the harder it is to predict, right? Yeah. Because there's so many variables and like black swans and like we just don't know what the future holds. And then also on like the super short term, like on a day trading basis, day to day, it's really hard to predict what the markets are going to do just because of randomness, right?
Yeah.
So like the sweet spot for me that I can kind of get a grasp on the markets is like 2 weeks to 2 months out. Anything shorter than that or longer than that, I just find it increasingly difficult to predict with accuracy.
Yeah.
So I don't know. What do you think of that? And like, what is kind of your timeline for where you feel comfortable looking out in the future?
I totally agree. And my timeline tends to be longer term. My investments, I typically hold anywhere from like 6 to 24 months, sometimes a little bit longer than that. So I'm looking for companies that can increase their value over several years, and then the market will actually give them credit for that, discover that, and it will be a multi-bagger type of investment. That doesn't happen typically like a week from now or 2 weeks from now. It takes time to play out. It takes time for company initiatives to actually, show up in the financial results and things like that. So it also means that even though I do pay attention to the macro and what's going on with the broader economy, really in the long run, it probably doesn't matter all that much unless society is like headed for some massive collapse. Because if you look, there are lots of dips, and we talk about this, stocks, great stocks that are the best performers of the last decade, like Netflix and Amazon and Apple and Lululemon and Square, that we have owned at various times. They'll go through big corrections, 20, 30, 40%. Sometimes it's market related, sometimes it's company specific. But in the end, if you look at the stock charts over 10, 15-year timeframes, they're pretty much just look up and to the right. You barely see those on the long-term chart. And so that's kind of what I try to remind myself at the end of the day is like, look, if you're finding great companies that can perform well over a multi-year time frame, it may not matter what's going to happen with the stimulus package, whether it happens in October or it happens 3 or 6 months from now, if the market takes a 20% dive in between. Just don't overpay for companies. Don't buy parabolic charts. Don't be stupid.
Yeah.
Find good companies at good prices. That will tend to work out over time, especially if you're position sizing correctly. You don't do anything too stupid to take you out of the game. These are like the fundamental things that we're constantly always talking about.
Yeah.
And it really applies across asset classes, I feel like.
And maybe it's easier. I don't know if easier is the right word, but maybe it can it can be more reliable to apply analysis to like one company, to where like, say you do deep work, fundamental research on a company and you're like, man, this thing's a value today. And if the business does X over the next couple of years, it could be worth X. Maybe it's easier to figure that out rather than just like the macro picture. Right. Yeah. I don't know of anybody that has been consistently right about the macro picture for more than one or two big calls. Yes. Right. Like to be a macro guy or lady and be consistently right over a career, I feel like is impossible.
Yeah. Yeah, I think that's right. Yeah, most economists' prediction records are terrible. Most macro funds, like their performance isn't all that great. Yeah. So, yeah, I think that's totally right. And like you said earlier, like I try to focus on the things that are more knowable, like looking at companies' financial health, looking at what their management teams are talking about in terms of new initiatives and their growth levers and things like that. Things that I can figure out a lot more because there aren't as many variables there. Yeah. There are some variables. There's competition. There's lots of things happening in their markets underneath. But with the macro economy, the number of variables is like astounding, especially when you're looking globally.
Yeah. So many variables. And like you can have a thesis, you can have an idea of what's going to happen. And then like one country starts a war or, one segment of the market gets over levered and throws everything else off. Right. Yep. Like it's kind of like being able to play 100 or 1,000 chess games at the same time and win most of them.
Yeah.
Right.
Yeah. It's a great point.
I guess one way that like I've applied the macro side is just my belief in Bitcoin and like hard money, right? Yeah. Like I feel like that's something that I can kind of see as like over time, fiat currencies eventually go to zero, and there's only a set period of time that the established world currency or world reserve currency maintains power, right? And so when I use that as kind of a long-term bull case for Bitcoin, that makes sense. But outside of that, day to day, I don't really know how to better use the macro picture other than like creating just kind of general opinions. And then like just, I don't know. I feel like sometimes it just does more harm than good to overthink the macro stuff.
I agree with that.
Yeah.
I genuinely agree with that. Yeah, absolutely.
Cool. Well, good to know. I'm not completely off base with that. The stocky said it himself. Let's dive into some questions. So Sam was asking, says, I'm 18 and just starting to invest. How would you invest your first $1,000 in crypto? Oh, that's a good question. So Sam, man, that's a great question. So thinking back to when I first got started, one thing I just tell everybody, and I think I've said this on the show a few times, is like when you buy Bitcoin or invest in crypto, assume you're going to lose your money. You're not hoping you're going to lose your money, but assume it. That way you don't have expectations of grandeur, right? And assume that whatever price you buy at today, be comfortable if price falls by 90%. If you buy today and you are going to freak out if it falls from 10,000 to 9,000, then buy a smaller amount to make sure that you don't do that you can have more capital in the bank. So, I just did a video talking about like cash reserves. And whenever I first got into crypto, I was like, I'm not going to just buy my entire cash portfolio into Bitcoin at one price. I'm going to get in, I'm going to learn, I'm going to work into that position. Also, the other thing to think about is how most altcoins, most other cryptocurrencies outside of Bitcoin will go to zero. Most of them. I don't know which ones will last and stand the test of time. I think there will be some, but most of them will fail because they're startups and this is very experimental. So don't expect to turn that 1,000 into 1,000,000 overnight, and just be disciplined with how you hold that, right?
Love that.
What would you say if somebody asked the same question about stocks?
I mean, honestly, you pretty much...
YOLO Tesla calls?
Yeah, I think you pretty much hit the nail on the head. With your first 1,000, hopefully you've got quite a long timeline of being able to invest and add capital to your portfolio, so you can make some mistakes early on. And really, it's all about learning, like you said. I mean, you don't want to be too stupid. You don't want to throw it all in call options that you lose next week.
Yeah.
You want to try to stay in the game, even if it's a small amount of capital. Find some companies that you think are interesting to you personally. That'll keep you engaged, keep you excited. Don't be just getting hot stock tips from some fake guru online. Actually find some stuff that you believe in personally, kind of like the Peter Lynch approach.
Yeah.
Don't invest it all in one. It's pretty simple stuff that I think if you take just a few of those steps, will get you engaged with investing. It will get you excited to learn more. You'll start to see changes in your portfolio, and that will take you down other avenues of discovery And then eventually maybe you'll join our community or take some of our courses and really go deep. But yeah, I think that, there's not a specific stock. I would say go invest in X stock today. I think you should follow the path that, takes you, that you find interesting, so that you kind of really get to enjoy the learning journey that you're going to go on.
Yeah. And I think another thing to like kind of decide early in your career is how active do you really want to be?
Yeah.
Right. Like we talk to people that are like, look, the markets terrify me. I don't want to think about it. I just want to buy a low fee index fund and forget about it. For that person, great. That's the right choice. For somebody else who's like, man, I geek out on the markets. I love this shit. I want to be in it all day, every day. Then experiment, figure out what you're good at, right? Like I wouldn't suggest day trading in today's markets, but you could be tactical. You could do what you do and find undervalued plays for multi-year swings or position trades. Or maybe you want to go real deep into crypto and find like the newest and hottest projects, and you're probably going to lose a lot of money on that journey before you get wealthy. So survive then thrive. But
I do think if Nikki were here, she would make the point, from a financial planning perspective. You're 18 years old, you're really young, you're starting with $1,000. Like I said earlier, you're hopefully putting in more capital over time. So you can be a little bit more risky with that initial position.
Yeah.
As long as you're not expecting, like you said, to need this money in the next few months or few years, if this truly is risk capital for you, then yeah, you can go out on the risk curve a little bit as a younger person who's expecting to put a lot more in over time.
Yeah, that's what I did in my late teens. I started day trading, blew out accounts, started like betting the farm on pharmaceutical companies that went to zero. Like you have to do those dumb mistakes.
Yeah.
Right? Like if you're going to have a quote unquote career in investing, no matter if that's a professional like you at a hedge fund or just a self-proprietary trader and investor managing your own capital, or maybe you work at a family office, whatever that means, you have to make all the mistakes, and hopefully you're going to make them with a small amount of money first.
Yeah. And I will say, you don't have to make all the mistakes yourself.
You can learn from other people.
Yeah, you can learn from great mentors, people like us in our community that have the battle scars that can maybe help shortcut a little bit, but you're going to definitely learn some lessons on your own.
Yeah.
And that's okay.
I was so stubborn. Like people were telling me, how to avoid mistakes. I'm like, I got this. And then like, sure enough, I had to go through the hard way. So there's an easy way and there's a hard way.
True.
Cool. All right. Next question is Randy Vest 99 asks, what do you guys think about investing in private hedge funds? I'm not even sure if I have access to any. How does it work? And do you think it's a good idea? Well, Trav, that is obviously right up your alley. So.
Yeah. So obviously I know the hedge fund industry well. I've, spent time working at various hedge funds, and it's a tough question because it is situational. There are wealthy families, wealthy individuals who have enough capital that they can get access to the best of the best hedge funds. And so they really can get access to managers that produce alpha, that can give you high returns on a consistent basis. If you're just, a individual with, maybe $1 million of capital, and you have just become an accredited investor and you're thinking about investing in some of these hedge funds or private investment vehicles, you're probably not going to be able to have as good of access. And so some of the funds that may meet with you are going to be, on average, lower quality. You might be able to get lucky and find some smaller up and coming funds. And those would be the places, if you're truly interested in investing in hedge funds, that I would really try to focus on if you're, a smaller investor who is accredited. So again, I should make the point, you have to be accredited to invest in hedge funds, unless you're investing in some type of ETF that invests in hedge funds. So that means typically in the US, for instance, annual income of $200K plus for several years, and then $1 million or $1 million of liquid capital, not including your primary residence, or more. Those rules are changing, though, as we know.
Yep. The SEC is starting to look into relaxing them and including more people, which I think is crucial, right?
Yes.
Like, why only let wealthy people or people that are already somewhat wealthy have access to this, right?
Agreed, 100%. So we've seen really good hedge funds and venture capital funds that have posted really high returns over the last decade or two really not have, most individuals can't get access to those returns because they can't invest in those vehicles. Now the SEC is actually allowing people to get education credentials that can meet the accredited investor status and things like that. So I'm really excited about that. That might honestly open up hedge funds for some people But there are a lot of pretender hedge funds out there. The hedge fund industry has become so big, returns have compressed on average. And so there's a lot of mediocre funds out there. You have to be careful with that. Like I said, it's really about finding either, the up and coming hedge funds that you can get access to that have great managers that are still flying under the radar that large institutions haven't allocated capital to yet, or through your family or your connections, you can actually get access to some of the best hedge funds in the world.
Yeah. Why don't we just quickly also describe like what are the different categories of hedge funds, right? So there's like public stock hedge funds that invest in public stocks, right?
Yeah.
There's PPMs, like private placement real estate deals, or what are the different funds that you're aware of or that are kind of the most common?
Yeah, there's so many. I mean, the most common is long short equity, which is funds that go long and short stocks across the globe. But there's lots of others. There's funds that invest in special situations. There's funds that do merger arbitrage. There's funds that are macro hedge funds that focus on trading different asset classes using macroeconomic indicators. There's quant hedge funds like Renaissance Capital and a few others like that. So those meet some of those. Convertible arbitrage is another one. There's quite a few categories, and hedge funds are really just an investment partnership. There's nothing special. I mean, the term hedge fund was given to private investment partnerships that only take capital from accredited investors.
So it's basically an investment company, right? There's no like magic to the hedge fund industry. I know it feels like this elusive space to most people where all this magic brilliance happens, but it's really nothing special until you get to the decision-making process of investing in stuff.
Yeah. And I am invested in two private funds, two hedge funds myself, and I would consider them both kind of more up-and-coming managers, manage small amounts of capital. And the reason that I'm in those is because, one, I think the managers are both brilliant, but also because they don't have so much capital that they're struggling to find investment opportunities.
Yeah.
So that's another thing. As hedge funds get larger, even hedge funds that had great track records like, Bridgewater, funds like that have become so large today that it's hard to imagine them putting up massive market-beating returns.
Yeah.
So I'm looking for funds that can put up the 20 to 30% type of annual returns, and you're probably going to have to go into some smaller, more up-and-coming funds to find that, or funds that are really, really specialized in a certain area. So funds perhaps that focus specifically on biotech, which is a niche that requires a lot of scientific knowledge, or there's funds like that invest in really odd corners of the market. They do SPAC arbitrage, for instance.
Yeah.
Probably relatively small funds that do that, but very, very specialized and can actually generate alpha.
Another example is one of our buddies that started a search fund where they're going out and buying boring brick and mortar companies, moving companies, certain like construction type businesses, plumbing, right? Where you have a company that makes anywhere from like 2 to 10 million in EBITDA, and then they can look to scale that into like a nationwide brand. I like that space because your risk is lower, I think, than tech, right? So like some of the tech deals we've invested in, we know a lot of that stuff just goes to zero. You lose all the money you put in, or something like that. I'm like, if you buy a company that's making a few $1,000,000 a year, and then you kind of take over operations of that company, put some really smart players that know how to scale businesses in, you can get really nice returns. Now, it's in the fund I invested in, that's yet to be seen, but I have a lot of conviction in that.
Yeah. And that's a pretty classic, like low to middle market private equity approach. And I think the managers that do that well can put up great returns, and but there are mediocre funds as well that, don't put up great returns in private equity. So maybe they use too much leverage, or they buy the wrong businesses, or they never actually know how to improve the underlying businesses. So when you meet with hedge funds, you typically will be able to spend quite a bit of time with the manager asking them questions about their strategy. They can give you, their deck, they can give you their materials, their marketing materials, and you can dig in and do some research, and hopefully they have some history of returns as well you can use to judge them by. And I wouldn't just invest in a hedge fund without doing research.
Yeah.
If you're an accredited investor getting access to funds, you should be able to put in the work and try to figure out if, the people are capable of doing what they say they do.
Yeah. And on the quant fund side, for example, like I invested in a managed futures fund. So a company that has, I think they're around $1 billion to $1.5 billion in assets under management. And they have a track record going back into the 80s, right? So you can see that they've been able to survive and outperform the S&P on average over time, net of fees, right? So that's something I really like, is like both on the new side, like here's a new startup and, small PE type deals. And then here's a fund that's been around for decades that has positive alpha, great performance. Like, I don't think there's like one category you just have to chase, but it helps to be diversified in the space too.
Agreed. Yeah, that's a great point.
Yeah. So what would we say to somebody who's like listening right now and they're like, damn it, I'm not accredited. Like what's some advice we could give them?
Well, I mean, I think even though hedge funds and venture capital funds may be off the table in the near term, like we said, there are ways to get accredited now, or there are going to be ways soon that don't require a specific amount of capital. You can go get an educational certification to meet the requirements. So that is a possibility in the near future.
Yeah. So explore those options.
Yep, explore those options.
Yeah.
Outside of that, there's so much opportunity in various markets, whether it's crypto or stocks. If you just want to put in a little bit of time and effort yourself, there are plenty of these opportunities to make the types of returns that a lot of hedge funds are putting up. You just got to kind of know where to hunt and how to hunt. And, that's why we try to teach that.
Yeah. And the other thing too is like, look, if you don't have a lot of risk capital right now, then bust your ass to get risk capital. Like, I didn't start out a millionaire.
Neither did I. I came from a family with almost no money.
Yeah. Yeah. So, you have to work. You have to put in the work, focus on what gets the best ROI, which is your personal income, right? It's not like, well, I mean, I guess you could get lucky and like hit it big and get a 10,000% return on something. But like if you put most of your effort on increasing your income and then managing your expenses and then like increasing that monthly cash flow to be able to have risk capital, like put 99% of your focus there.
That's a great point. Yeah. Yeah. That's such a great point. Yeah. If you're someone who's way under the accredited investor threshold, don't worry about all this. Don't worry about the hedge funds, the private equity funds, the venture capital funds. Don't worry about like what you can have access to. Focus on the grind. Focus on increasing your income. Focus on, building up your own investing chops. Eventually you'll get there. You know, if you do it right and you compound and you don't take yourself out of the game with some crushing loss by doing something stupid, you'll get there.
Yeah. Yeah. And, it doesn't hurt to learn now, even if you're not ready to invest.
Yeah.
Put in the work, put in the time to learn the different types of funds and the pitfalls to avoid. And
yeah. I mean, shoot, now in crypto and stocks with fractionals, you can invest tiny amounts of money. So like, I've seen more and more people getting their kids involved at like teenager age now in investing. So it's luckily accessible broadly. Low commissions or no commissions on a lot of this stuff. It's
a lot more accessible than when we were in school.
True.
Yeah. Awesome. Well, let's go ahead and wrap it up with Peloton. Hey. So Trav, I know you've had a Peloton for a while. I just joined the cult. I had my first couple of rides this week.
What do you think so far?
I love it, dude. I love how they gamified the bike.
Yeah.
So, we both are big mountain bikers. We love going on single track and getting outside. Obviously, there's no replacement for that.
Oh, yeah.
But what I really like about the Peloton, and I didn't really appreciate this until I got one, was how they gamify when you're riding. You can see like your total, like, what is it, kilojoules or total watt output.
Yeah.
And then you can see the resistance. Like the instructor will be like, okay, be inside of this range with resistance and then this RPMs, rotation per minute. And then, you try to gamify and then you see a leaderboard and you can like try to go up the leaderboard. So for me being super competitive, like I love it.
Same, man. Same. Yeah. I was a little skeptical and, I think a lot of people make the comment, well, it's so expensive. The bike starts at like $2,000 or whatever. And you could just get a $700 bike and off of Amazon and put an iPad on it and download the software or whatever. But it's just not the same. First of all, the bike is super well built. It's actually, I've used different trainers over the years. And this bike is really, really nice, very, very heavy, very well built. But also, like you said, it's really the magic is in the software and the way they do the classes.
Yeah.
And so for guys like us, like you said, that are competitive, just the ability to track your stats over time too, I think makes it a really cool way to gamify your own health. Even if you're not competing against others, you're like competing against yourself.
Yeah. Like track improvement over time.
Yeah. And it's cool too. They offer like 0% financing and stuff like that. We sound like we're like doing a commercial
Right?
for Peloton. We're not being paid for this.
Let's go to PTON. Let's see where the stock's at. Oh my God.
Yeah,
Yeah.
the stock
This is why it's been on a rip, right?
Up 5x this year.
Damn. I know Nikki's kicking herself because she bought it before the breakout. I want to say in the 30s. Do you remember?
It was low 20, or maybe even it was around $20 a share in the springtime.
Oh, wow.
And I think it might have been here when it was testing the zone, and then it kind of had a sell-off there for a couple weeks, and so she got out of the position due to her risk controls, which is smart.
Yeah.
But then the stock obviously went on to be a monster, and
that's part of investing, right? Like, it's frustrating as hell when that happens, but like that happens.
Yeah.
Yeah, I don't know. I'm super bullish on just the fitness space in general. Obviously, work from home has changed a lot of things. I think this is a trend that's going to continue to change.
Yeah.
I'm like, if I owned a gym right now, I'd be real nervous.
Yeah.
No,
yeah.
What do you think, man? Because you're a triathlete, you're an Ironman. I'm still trying to just lose this COVID weight.
Man, I put on the COVID weight too, but yeah, in former life, I did a lot of triathlons and was, very active in a bunch of sports and trying to stay healthy now. That's really the main goal. But yeah, I think, gyms will mostly be fine in the end, assuming the virus, things don't get really weird or worse with that. But I do think that the work from home, the fitness from home trend is real and will probably take some share of the market.
Yeah.
I tend to think most gyms will probably be fine in the long run, but yeah, I think this...
So you think the pendulum will swing back into gyms?
For a lot of people, yes.
Yeah.
I mean, for me personally, like I have the Peloton, but I am excited about returning to the gym to do more weights there.
Yeah.
There's just a lot better equipment, a lot heavier weights there that I don't really get at home. Now,
it's tough, man. It's tough to work out from home and try to get the full range, but
yeah, that's the thing is like I'm just much more motivated in the gym.
Yeah.
I know that some people, there's been a big uptick in people building their home gyms during this time. And so that is certainly going to take away some of the market share of gyms. But, overall, I do think the connected fitness market is going to be one that is in secular growth for a number of years because the products are getting really good. And they're gamifying it in ways that I think make it
addicting.
Yeah, I mean, old the funny saying is like your treadmill or your bikes at home become like clothes hangers.
Yeah,
but we haven't seen it yet with the Peloton. So
yeah, I'm waiting for the secondary market to get flooded.
Yeah,
like maybe in the next 6 months, maybe on Craigslist and eBay, you'll just see like thousands of bikes and the prices will get crushed.
Yeah,
that'll be interesting to see. Or will they be able to maintain this momentum and keep people engaged?
Yeah, and it's huge, and they'll keep releasing new products too. So maybe that will help. But we actually looked at the stock in the live investing course, the 10-week investing course that we finished up over the summer that I was teaching. We used Peloton as one of the examples, and we modeled out the financials of the company. We talked about the business model in depth, and it was really interesting because a lot of people think Peloton is like making all their money selling the bikes, and that's not what this company is really all about. It's the subscription business.
Is that where the lion's share of their revenue is coming from?
In the future, that will drive almost all of their gross profit and all of their operating profit.
So they got a lot of money now from the sale of the bikes, but the projection is that ongoing, what is it, $30-$40 a month?
Yep.
That will make up the lion's share?
Yep. Because the bike, they more or less break even on it. They actually have positive margin on it, but they use that margin for marketing.
Right.
So they essentially are breaking even on the sale of the bike when it comes to operating profit bottom line. But it's the subscription software revenue they get from you every month after that becomes the big driver of profitability.
So they basically bought a shit ton of users for free or made a little bit of money on the bike, and now they have that.
That's
nice
right. Yeah.
Continuity.
And they're building the flywheel. That means they can pay for the best instructors. That means they can pay for better product development. That means, it's the classic flywheel. Now, I don't know if this thing at this point is a little bit ahead of itself in terms of valuation. It probably is a bit.
Yeah.
But very, very interesting success story, and one that is one of the ones that got away this year from us.
Yeah. It happens, man. All right. Well, looking forward to earnings season.
Yeah.
So that's coming up. We got the election in 30 days. Things are definitely going to get wild. I thought by now we'd see more volatility. Gold and silver still kind of hanging out, had a little bit of a pullback. Bitcoin holding steady. Again, despite all of the bearish news that's come out, like this thing's been holding up above 10K, kind of squeezing, right? Like we've basically been seeing falling volatility ever since March, and just kind of tracking stocks a little bit. I think there is like some net positive correlation there, which is kind of, it's expected, right? When you have a lot of fear in the markets tend to move in sync.
Yeah. Yeah. For a while there, we were seeing Bitcoin negatively correlated to stocks, which is, I think, a huge benefit of having Bitcoin in the portfolio.
Yeah.
In this market, last few months with a bit more stress in the markets, we've seen more correlation, but I'm hoping we'll see that relationship diverge again.
Yeah, I expect it in the near future.
Are there any catalysts on the horizon you're kind of waiting or watching for Bitcoin at this point?
Nothing specific to Bitcoin. I guess obviously the biggest thing right now on everybody's mind is just the election and then what's happening with COVID. Long term, obviously, I'm a super bull in Bitcoin. I mean,
yeah.
We've talked a lot about like the stock to flow ratio and obviously like the longer term models that there's no guarantee of, but that's the clearest path that we have. And I'm sticking to that until something fundamentally changes.
Yeah.
So
love that.
Yeah, man. All right. Well, anything else you want to talk about before we wrap up?
No.
Cool. Next week, we'll have Nikki back.
Yes, we'll balance it out a bit.
Yeah.
Hopefully.
Cool. Well, thanks for watching, guys. Go to wetalkmoney.com, submit a question for the show, subscribe on podcast, YouTube channel, and we'll see you guys next week. Take care.